Okay, this is another back to a look at my spreadsheet, my nightly work. Uh, Wanted to start here where this is being done on January 15th, before the Martin Luther King holiday. Uh, Friday, the market closed at new highs for the last 52 weeks again. It keeps going higher and higher. We've had for the last 8 weeks the market's gone higher without so much as a um, not even a half of a percent correction, not even 1/2 of a percent uh, pullback within the last 8 weeks. In the meantime, this is an intermediate term look here. We're looking at the last, this is 3 years of data. This is a high-low index, which has gone since peaking with the last high here, and this last run up has gone basically flat. So new highs, new lows have flattened out. That's not normally, we're not confirming this new high at the moment here. Bring on to the next indicator. We got this here is a summation index. This measures breadth, and it shows, when it rolled over before highs, it's a red flag here. You can see it this high, and when it turns up, it's pretty good at highs and lows. It's more intermediate term, and looking for divergence. There's nice divergence at the low, and for divergence and bought oversold extremes. Mostly for divergence, you want to see this confirming price, and as you can see, this also peaked out here, and has been in advanced declines have not been keeping up with the latest run off of this last low. Now, let me check out a couple more. This is a couple more intermediate term indicators. This is volume, up and down volume. This is a volume oscillator. This is another intermediate term indicator, but when they not confirming price and begin to cross the this crosses over its 10 period moving average or shows divergence, that's a red flag. This volume, not so much as again, this is advanced declines, and we turned up off the last lows here. This is the S&P on top, by the way, and the indicators on the bottom. But as the turned up here, we're far from keeping up with the price action at the moment here. As far as sentiment goes, there's a lot of talk about sentiment extremes, and we certainly have those. I'll show you a few here. We'll go back just for put call ratio. If you look over the last, this is the last 2+ years here of data. Only one time in the last 2 years did the 10-day put call ratio, size from this spot here, get to these levels. This would be the, as you can see, right at this top. We'll come back to this point here in a second. But at this extreme here, it was unusual in that for once call buyers were correct. That's a rarity. Now they're coming back up to new all-time highs, and sentiment as far as put call ratio goes, getting to an extreme. The VIX and it's the VIX. Now this is a VIX with the 10 period moving average. This is again, it's the last 3 years. If you look right now where the VIX is currently just above 15, the last time we were at this level, we're back here. Again, at this high where we had the divergences I just showed, the VIX raw reading, and also at the bottom band here, really a heads up red flag on this, that you know, lowest levels in almost 3 years on the VIX. Not only that, but getting stretched, um, almost below the 10% band, and it move below that turns back up, then is really a red flag. Finally, this is a VIX and S&P ratio. Again, we'll go back to this time frame. We're looking at last time the VIX was down at the 15 area. It was right before the top, this top, and the internals again will look the same. We'll go back and retest this. But this is the VIX divided by the S&P, and it has 20% envelopes above and below. I'm sorry, 15% above and below. Last time I mentioned this being at a sky high rate was I did this a few weeks ago. Since then, the VIX has come up a little bit while prices have also gone a little bit higher. It came back to it reverts to the mean, to the 20, or to the moving average, the 25 period moving average. And now it's back at its highest level, 84.32 on the ratio. Highest level in over 3 years here. So we can expect volatility to perk up or prices to come down, and most likely prices will be coming down here. Again, that ties in with when we have our high-low oscillator is flattened out, along with again at this last high, we had non-confirmations with the internal gauge here, and a very pronounced one at this point. See if there's anything else. As far as we got bigger, that's the bigger picture look. Let me show one other indicator, a positive momentum PMO. It is also, this is a nice indicator for, you want to see this confirm or not confirm. We had higher lows here when we were making bottoms, and pretty positive there. Made a high at this last high here, and ever since the pullback, internals just cannot keep up, and prices have gone higher. So 8 weeks, not so much as, only so much as a not even 0.5% correction in 8 weeks. Sentiment and internals are sentiment at extremes, internals not keeping pace. So what it's going to take now, as we stated in the update, I think that the 1187, we look at the ES new high on Friday, it keeps coming back to the break. It breaks out, comes back to the breakout area, and then moves on higher. So there's a mini area. First mini area on the ES is at 1287. Then below that major is 1270. You can watch the 1276 level, 1276 area on the ES. If we get a daily close under 1276 on Tuesday or Wednesday this week, then, and the indicators would roll over, I think we're going to have a trend change. That's what it'll take. Should roll over the indicators, should give us a sentiment shift, and would also turn the charts to the downside. So middle of January here at new 52 weeks highs, internals not keeping pace, sentiment to extremes. Now just need the charts to make a little break and show some damage. Again, 1287 and then 1276. Hope this helps. Come on over to tradestalker.com and check out what we have to offer. We've changed our services back to where we can give real-time guidance on intraday trades also. So hope this helps. Hope to see you soon.